What's up, you guys? We back with another video, and we're going to continue building this trajectory on this options account. So my main thing I want to do here is kind of document my journey with it. I don't want to position myself like I'm an expert and I have the whole thing figured out, but I do want to be transparent, and it's also going to hold me accountable to what I'm doing in the stock market. Granted, this is something I'm going to do anyway. I'm passionate about stocks and options. I think this is going to be a way that it's going to build. I'm going to build wealth. I'm going to build a great nest egg. And I think that you as a viewer, you can benefit or learn from some of the mistakes I make, or some of the things that I do well in this industry, or not this industry. I'm a barber, so I'm used to saying that. But in this game, like, this is a whole different playing field. So I'm always going to get on here. I want to do it like every week and talk about my plays that I entered, plays that I exited, and then how I like the wins and losses, and then what did I learn, what did I take from that previous week in the stock market. So we had a few plays that we made. We exited out of a couple plays that we talked about in the last video, and we had a nice play that did real well for us. So let's get in right into it. I don't want these videos to be super long and complicated. Granted, like, as the channel grows, we're gonna get more in depth. We're gonna grow with maybe I might start teaching a little bit more about options, but right now I'm mainly just documenting. So we took a couple L's on puts we sold. And one thing that I have figured out about my strategy is that I don't think that selling puts will be that beneficial. First off, I looked at my track record. When I buy calls opposed to selling puts, I'm performing way better. So I'm gonna stick to my guns of what I know. I think that, honestly, to my fault, I know that I don't really want to take on these shares. So I'm kind of at a downside risk that's unlimited, because if you don't want to take on those shares, that's part of the whole will strategy, not minding being assigned a contract and then going ahead and selling calls on it to the other side. But I'm going to show you guys what I mean a little bit better. So one of the plays that we exited that we talked about in the last video was this 5 and below play. So the blue lines is the day that I entered the play and exited the play. The first reason I got out was because I didn't want to take on these shares when it expired 2 days after that 5/13. So this option contract was going to expire on the 15th of May. And I didn't want to take on those shares. When you're selling puts, you're saying if it drops below a certain strike price, you're willing to take on those shares. My goal when I was selling puts is I wanted to stay above that strike price I sold it at, so I can just keep the premium and go about my business. And the downside of that is almost unlimited losses that you can take on with only a finite amount of profit that you can take. So I'll dive into that a little bit better. But so I got in, and it was holding up this 50-day moving average. This purple line is the 50-day moving average. And you can see during the duration I played, it actually broke down below it with heavy selling pressure. And I seen this little small doji right here. That's why I was like, maybe at my price point it can turn around, because you see at this 220, this yellow line, I was also confident in this strike because you can see as it came up, it had resistance in this area. And then resistance turned into support here, support here. So I wanted to keep that upward momentum of that and holding up this 50-day moving average, the purple line. Those are the two reasons that I entered this play. And doing some research on 5 and below, the CEO is actually, they got a new CEO, and they're actually better in that business, and it's been seeing a lot of growth since. But that play ended up breaking down to 50 and breaking past our strike, and it had that Friday expiration, so I went ahead and took a loss on that. Moving on to the sky play, the Champions Home play. Honestly, I never should have been in this play, and that's one thing also about, I think, my mindset, and it's to my own fault with selling puts, was kind of since I give myself so much cushion, it should likely go in my favor anyway. When not, I feel like in this market, stocks have just been going parabolic. It might not even just be in this market, but you have a lot of AI stocks that's running, and why sit here and try to collect a little bit of premium knowing I don't want, me personally, knowing I don't want to take on the shares. So why take on this little bit of premium when you can get in calls for possibly unlimited upside? So right here is a play that I got into. That $75 was my strike. It needed to stay above that. I got in on this blue line, and I barely gave it any time to stay above this 200-day moving average, which is my green line here. Okay, so my moving averages, I have it set to 50, which is my purple, 200, which is my green, and 400, which is my blue. And moving averages basically tell you how the stock has performed over the whatever number of days you put. So for 200, is my green line. It's telling me, this green line right here is telling me this is where the average price of the stock is from the past 200 days. And typically, if a stock is above that moving average, that means it's in an uptrend. So what I mean by that is I enter right here. I barely gave it any time to really show strong strength that it's going to go on an uptrend, because I entered so early when it just finally broke right back past this green line, signaling for an uptrend. But it had no heavy volume. It kind of had a heavy volume on this day when it broke above it, but it's not that much volume. It's not that much follow through. I really shouldn't have been in the play. I seen that it was resistance, like I said again, resistance right here at the $75 price point that turned into, well, support. I'm sorry, right here, support, and support turned into resistance, turned into support again. So that's why I was also looking at support and resistance that helped me enter this play. And also, you can see here my gray line is also support that I thought if it was to break past my price point, I didn't think it would fall any more lower than that. But you can see once it did fall and break the 200-day, it also came past my strike. And it did hold up a little bit at that $72 price point, about this gray line. But you can see it broke right back down. And I was doing some research. It's because the mortgage prices, the the mortgage rates started rising. So that affects a company like this. You always want to understand how a company makes their money so you can know what headwinds are going to affect the place you're in. So for instance, if you're in a company like, say, Nike, when the tariffs hit, Nike is heavily dependent on China. So a company like that is going to be affected when things like tariffs come around. So you don't want to just enter a play because maybe you see I posted or your favorite influencer posted, but if you don't understand like how that company makes their money, and what is the things that can affect their business in the long run. Because when people are placing their money into a stock, the stock market is a forward-looking mechanism. So they're banking on good things to happen for this company. They're banking on continued growth, continued revenue. So that's what causes a stock to go up. If they're continually making their numbers, beating their earnings, having great forward guidance, saying they expect to grow, then probably that stock is going to perform well. And you want to know why it's going to perform well. So those two plays, we lost about 13.45 on those two plays combined. And my next play that I got into, I'm going to show you why. Another reason why I'm getting away from this strategy. So you can see, basically, we sold the put. We sold puts right here. On this is the day I entered. This is the day I exited. Sorry, this is the day I entered. These are the expirations. This is the day I exited. Basically, my strategy. Basically, these are the strikes. And this is right here, the premium I would have collected. So, well, I'm getting away from selling puts for the moment. I'm not completely done with them. So say right here, we could have collected for $45. Let me clean that up. I'm gonna go green. No, I'm gonna go pencil. I'm gonna go green. For $45 we could have collected, and we ended up losing what, 13.45 negative. So we ended up losing more than our upside potential. And I'm not saying this is always what's going to happen, because granted I could have took on these shares and started selling calls to the other way, but honestly that's not really something that I want to do. I don't really know. And you gotta base your strategy off your trading psychology. I don't want to hold these stocks. I think it's better stocks that I could be holding on to, that I think has more long-term growth perspective, long-term growth potential. So I took the L on those plays. So we're gonna move on a play we got a nice call on. So we made a nice call on ARM. It was a couple things that helped me get into this play on ARM. First was that when I looked at the chart, I seen that it was holding up support in this area. Like this blue line is me seeing that it's holding up support in the upward trend. It had a strong swing up. It had some downward consolidation, maybe some profit taking. People have made a lot of money right here, so now they're getting out to play, and taking some of their profits. But it continued to, even though people had took profits, it had higher lows. So when it bounced down, it came back up and it had a higher low, and it came back up and it had a higher low. So once I seen that third higher low and I seen this bottom doji right here, I went ahead and entered the play, on the end of this day. And then over the course of the next few days, it shot up. But that's not the only reason I entered the play. On their earnings date, they actually announced that this company, ARM Holdings, they design chips for companies like Apple, Nvidia, all the biggest companies who, have these GPUs and CPUs. They actually design the chips for them. So on their earnings call, they said, they made the announcement that they're going to start actually producing the chips themselves and get into the CPU space, which is expected to grow as this AI stuff continues to go on a rampage. So I'm like, that's multiple things giving me confluence that this stock has a long-term growth outlook. And when it went crazy this day, honestly, I went ahead and took my profit. We almost did about 100% on this play. You see, we profited about almost 3,000. And that's just from one play. And our downside risk was tapped at 31.75, which we bought the call for. Now, granted, I could have let this play. You see how crazy it went. It probably got up to about a 400, maybe 500% return right there. And I just sold one contract right here, what you see. So I didn't really want to. I feel like I was cool with that 100% return, even though I should have held my horses. But who's to say? I think that's something I'm going to have to learn, especially on the fact I'm going to eventually get into doubling up on contracts and whatnot. But trust your gut. That's one thing I wanted to say for this. But I'm going to get in more into what I'm taking away from this week. So so we actually ended up in profit. That single win right there outdid those two plays right there. So I'm currently in Robinhood, I'm currently in Meta, and I'm currently in a ServiceNow play. I kind of showed you guys the Meta play. It hasn't been doing too much. I haven't sold any calls right now on Hood. I'm honestly looking to just get out of it. I think it can do good long term. I think they have a lot of good things going forward, but I think it's better things I can hold long term, especially as I get away from the wheel strategy for a little bit. And on the ServiceNow play, we can look at the chart. Like I said, I got a good. I have people that I like to listen to on their stock ideas as well, and I got this one from Troy from Earn Your Leisure, and I didn't just jump in it willy nilly. I already had a kind of an understanding for ServiceNow. They're a good software company. They work with a lot of the biggest players, a lot of big companies, and help them pretty much deploy AI or deploy software into their business, and it saves them money. They have systems built out, and they've been taking a hit because people thought that if I go on the weekly chart, People thought that AI was going to kind of run them out of business and people were going to get away from them. But here of late, we find out that's not true. They're actually implementing AI into their business and helping customers save money and helping customers introduce AI into their businesses at a much better pace. And I'm not saying small companies. They work with big companies. Like if we can just look at the news at them. Some of the companies they work with. I know like CVS is one of them, but I like to use stock analysis website to research up on companies. But one thing I am paying attention to on the weekly chart, they do have a bottom doji, or they have bottom wicks, which showed me it was the downside trend might have been over with. Right here, you can see that once it reached this point, sellers probably got exhausted. It was strong selling pressure this day, but it started to trend slowly back in the other direction, and it was some bottom wicks on shoot. I still need that trend line though. Let me just go back. Let's go back. I don't want to erase that trend line. Oh my bad, y'all. I need that trend line there still. Maybe I can just miss it. Nah, they don't want me to be great, so I'm gonna just keep those yellow lines there for the moment being. But that bottom doji here showed me that potentially it was going down doing a reversal, but it just had a rejection off that 400-day moving average on the weekly chart. So that's something we're going to pay attention to this week. And if we go back to the daily, we can see that. Sorry. If we go back to the daily, we can see. There we go. There we go. I have that box gray because I think that that's a strong area to pay attention to. Right now, you can see that once it came to this area, it held up support, and then it came back. It held it up for a little bit, then it broke through, and then it came back to retest it, and it rejected it back down, and then it had higher lows. It had higher lows. It started breaking through that 50-day moving average, and then of course it's going to be a little price action, heavy price action at an area like that when it's having breakouts. So it came back, and then now we're at our area of focus. So in this gray area we're paying attention to, it's a doji. We're looking for it to continue to this upside, but it might have a little bit of choppiness in this area. But we see that because it's indecision. Basically, it's buyers and sellers in this area that's paying attention, and nobody really won that battle. So we're going to pay attention to that this week and see how that goes. But yeah, I showed you guys my meta play last week. And so the only thing I do want to show you is what's on my watch list. So this week that I'm watching NVIDIA, because I feel like it's like, you know how people hold LeBron to such a higher standard even when he's putting out great numbers. NVIDIA had a good earnings call, and for some reason the stock price is falling. So I want to pay attention to this area at the 212 where my gray line is at. If we go to a weekly chart, we can just see that that was a previous all-time high area. And then on the daily chart, we can see that once it got back in that area the first time, it kind of had a nice little rejection. And now, simple enough, I don't like to overcomplicate anything. All I'm doing is looking back and see if resistance can turn into support. So I'm going to see how it performs in this area during this week. You can see it was heavy selling pressure on this last day, but we're going to see how it performs through the week. I'm not going to try to chase it. I'm not going to try to force anything. If it doesn't have a clear sign of a possible reversal or even if it falls a little bit lower, we're just gonna sit on our hands until it lines up how we would like it. So let me see if we got anything else. So what I learned to basically really just stick with what's working. Um don't try to get out of your niche pocket. Honestly, buying calls was working for me, but selling puts was attractive to me at a certain point because I thought that, okay, if these numbers make sense, this cushion makes sense, the chart looks okay, it's a good company, oh, that's free premium. But I didn't really want to take on the downside risk of being assigned and then having to go through execute the wheel strategy. So I really didn't need to go into that pocket. So for me, I want to stick with what's working. Also, want to trust my instincts on the arm play. We did the research, everything lined up. We took profit. Nothing's wrong with taking profit when you see that green, but that play still could have had more room to grow. I think it even still has more room to run a lot because, granted, they're the best designer in the space, and then they say they're making chips. You feel me? They say they're going to start producing their own chips, you know. So I think that a lot of companies already trust them. I think that um, they already have leverage in that space. So I think it will continue to run. So that's some of the things I learned from this week. But like I said, this is honestly already longer. If we can get these weekly videos down to 10 minutes, I think that that'll be the best way to go. But if you're still here, I appreciate you. I hope you, if you're not already in options, I hope I inspire you to get on your journey and we can learn together. You can learn with me however you know, well, however you like. But I appreciate you for tapping into another video, and I'll catch you on the next one.